Imagine a company that has dominated the world of technology for decades, a company whose devices are coveted by millions, a company known for innovation, for thinking differently, and yet, in one of the fastest-growing, most transformative sectors of our time, this company is trailing behind. That company is Apple. And the sector? Artificial intelligence. For years, Apple has promised that AI would be the next frontier for the iPhone, for the Mac, for everything it builds. Siri was supposed to be the gateway, a digital assistant that could understand you, anticipate your needs, and revolutionize the way we interact with technology. Yet, despite billions of dollars invested, Siri remains the punchline of AI jokes, and now Apple is taking a surprising step. They're turning to a competitor, Google's Gemini, to solve their AI problems. Why? Why would the world's most innovative tech giant, known for building everything in-house, suddenly hand over one of the most critical aspects of their future to a rival? To understand this, we need to look at the journey of Apple in AI. Siri launched in 2011. At the time, voice assistants were a novelty. Apple promised an assistant that could understand context, follow conversations, and act intelligently. But from day one, Siri struggled. Responses were awkward, comprehension was limited, and integration across devices was inconsistent. Apple's solution was not to abandon it, but to build its own AI, what some insiders have called Apple Intelligence. The idea was to create a proprietary system, tightly integrated with Apple's hardware ecosystem, keeping data private and the experience seamless. The theory sounded perfect on paper. Apple's ecosystem has always been about control. The company designs its hardware, software, chips, and even the stores people buy from. If anyone could pull off AI while protecting privacy, you'd think it would be Apple. But in practice, the execution stumbled. Fast forward to today, artificial intelligence has exploded, and the world is in the midst of a generative AI revolution. Companies like OpenAI, Google, and Microsoft are releasing tools that can write essays, code, and even create images. Artificial intelligence is moving at a pace that's almost frightening. And Apple, despite its billions and brilliant engineers, it's behind, far behind. What went wrong? The first issue is a philosophical one. Apple has always approached technology cautiously. They prioritize privacy, quality, and design. But AI, especially generative AI, thrives on massive amounts of data and rapid iteration. You need to test, fail, learn, and iterate constantly. Apple's culture, focused on secrecy and perfection, clashes with the openness and speed that AI demands. Second, Apple underestimated the complexity. Artificial intelligence is not just software, it's infrastructure, chips, cloud computing, machine learning models, and above all, an ecosystem of constant feedback. Apple tried to build all of this internally. But even with their massive resources, AI has proven to be one of the hardest technological frontiers to master. Third, competition is relentless. Google's Gemini and OpenAI's ChatGPT are not just products, they are ecosystems. They feed on vast amounts of data, improve daily, and leverage partnerships with billions of users. Worldwide, Apple's AI, isolated, siloed, and cautious, couldn't compete with this pace. And so, Apple made a bold, pragmatic choice. They decided to integrate Google's Gemini into their ecosystem rather than trying to reinvent the wheel. It's a move that raises eyebrows, but it's a recognition of reality. Sometimes even the most powerful companies must admit when their approach isn't working. Now, you might be wondering, what does this mean for Apple's identity? For decades, Apple built its brand on the idea of "we do it ourselves." From processors to operating systems, they rarely outsourced core technology, and now they're relying on a competitor for the very technology that defines the future. That's a seismic shift, and it could reshape Apple's strategy for years to come. But the story doesn't stop there. This isn't just about Apple playing catch-up. It's about the AI arms race, the economics of innovation, and what happens when a giant decides to pivot. In the next part, We'll dive into the financial and strategic implications of Apple's decision, explore how it affects the AI landscape, and consider what this means for consumers and investors alike. Let's talk numbers. Apple isn't just any tech company. As of today, it sits at over $3 trillion in market capitalization. That's more than the GDP of most countries. When a company this big struggles with AI, it isn't just a tech story. It's a financial story with massive implications. Investors are starting to ask tough questions. Apple's revenue is still strong, yes, but growth in key areas like AI and software services has been slower than competitors. Microsoft, fueled by OpenAI, has seen an explosion in its AI-driven cloud services. Google is monetizing AI through everything from search to advertising. Meanwhile, Apple's AI offerings remain underwhelming, and Siri, once touted as revolutionary, is still lagging behind. Why does this matter financially? AI is no longer just a nice-to-have. It's becoming a core driver of profit margins. Generative AI reduces labor costs, improves efficiency, and creates entirely new revenue streams. Companies that dominate AI early are not just innovating, they're capturing market share that compounds over years. By falling behind, Apple risks losing a competitive edge in services, cloud infrastructure, and even consumer devices. So, why not double down and build it themselves? The truth is, Apple has tried. The so-called Apple Intelligence Project poured resources into proprietary models and hardware designed to run AI seamlessly across iPhones, iPads, and Macs. But here's the catch. Apple's approach is extremely closed. Their models can't leverage the sheer scale of global data in the same way that OpenAI or Google can. AI isn't just about intelligence, it's about scale, learning from billions of interactions and iterating in real time. Apple's internal AI simply couldn't keep up, and this is where strategy meets pragmatism. By partnering with Google's Gemini, Apple isn't surrendering innovation, they're buying time. They're leveraging a platform that already works at scale while they continue to refine their own AI behind the scenes. Think of it as using a rocket engine someone else built to get your spaceship off the launch pad, while you perfect your own. But there's another angle to consider: privacy. Apple has built its brand on user trust. It's the company that says, your data stays yours. Integrating an external AI model like Gemini is tricky. How much data will go to Google? How will it be protected? Apple has likely negotiated strict agreements to limit exposure, but this move could redefine the privacy trade-off that the company has long championed. It's a balancing act between speed, functionality, and trust. Now let's step back and look at the broader AI industry. Apple's pivot underscores something important. AI isn't just a technology, it's an ecosystem war. The leaders are not the ones with the fanciest designs or the slickest devices. They're the ones who combine software, data, hardware, and cloud infrastructure into a self-reinforcing loop. Apple's closed approach, once its greatest strength, became a strategic liability in AI. This has implications beyond Apple. Competitors, investors, and even regulators are paying attention. Companies that underestimated AI are now scrambling to catch up. And for consumers, this could mean one thing: faster access to smarter AI in Apple devices, but at the cost of relying on external platforms. Siri might finally become useful, but the magic behind it isn't Apple's own. It also raises questions about innovation incentives. If even Apple, a company built on ingenuity, finds it impossible to go it alone in AI, what does that say about the barriers to entry? The AI landscape is consolidating around a few major players, creating both opportunities and risks. Smaller companies may struggle to compete unless they specialize in niches or partner strategically. And then there's the economic ripple effect. Apple generates enormous revenue from its ecosystem. The App Store, subscriptions, services, and device sales. Artificial intelligence could enhance all of these. Imagine smarter predictive features, improved recommendations, or AI-driven health monitoring on the Apple Watch. By catching up via Gemini, Apple can deliver these innovations faster, keeping users engaged and retaining their premium pricing power. In short, this isn't just about catching up. It's about survival in a world where AI is rapidly becoming the differentiator between tech giants. Apple's decision reflects a recognition that sometimes pragmatism beats pride. The company's ability to adapt, even if it means leaning on a rival, could define its trajectory for the next decade. So, what does all of this mean in the big picture? Apple's decision to rely on Google's Gemini is more than just a tech story. It's a lesson in strategy, economics, and the brutal realities of innovation. First, for investors, it's a signal. Apple remains a titan, but it's no longer untouchable in every frontier. Growth won't come from hardware alone. AI is where the future margins, efficiencies, and consumer stickiness lie. By partnering with Google, Apple is buying time, but it also admits that competing alone in AI is not feasible right now. That kind of pragmatism can be healthy. It shows adaptability. But investors will be watching. Can Apple eventually leverage this partnership into a proprietary advantage, or will it forever be trailing in the AI arms race? Second, for consumers, this is a win. Siri, long a source of frustration, might finally become a tool that actually works. Apple devices could feel smarter, more responsive, and more integrated with our daily lives. But there's a caveat. This AI isn't fully Apple's. The intelligence comes from outside. That's a philosophical shift. Apple's brand has been about controlling the entire experience. Now, some of that control is outsourced. For users who value privacy, the trade-offs will be worth examining. Third, for the AI industry, Apple's pivot is significant. It confirms that AI is not just a feature, it's infrastructure. The companies that dominate AI are doing more than building models. They are building ecosystems, collecting feedback, iterating faster than anyone else. Apple's closed approach simply couldn't keep pace. This is a reminder that even the most innovative companies face limits when the scale and speed of technological change exceed their internal capabilities. There's also a deeper economic lesson here. In tech, and especially in AI, first-mover advantage and scale matter immensely. Data drives intelligence, infrastructure drives speed, talent drives innovation. Apple has all three in abundance, yet the constraints of its culture, secrecy, caution, and perfectionism slowed its AI progress. By acknowledging reality, Apple has chosen survival over pride. That's a strategy in itself. Looking ahead, what does the future hold? Apple may continue to integrate third-party AI in the short term, but long-term, they are likely to invest in creating their own models once they can do it at scale without compromising their principles. They've done it before with chips. The M1 and M2 processors redefined the industry, combining hardware and software in ways no one else could. Could Apple eventually do the same with AI? It's possible, but it will require patience, enormous investment, and perhaps a culture shift towards experimentation and rapid iteration. The bigger picture is clear. AI isn't optional anymore. It's a central pillar of technology, finance, and consumer experience. Companies that fail to integrate it effectively risk losing relevance. Apple's move is both a wake-up call and a roadmap. It shows that even giants must adapt, even giants must collaborate, and even giants must recognize when they're behind. In the end, Apple's decision is a study in pragmatism, economics, and strategic timing. It's about balancing ambition with reality, brand integrity with functionality, and long-term vision with short-term execution. It's also about the relentless pace of technological change. Even the most successful companies can be caught off guard if they misjudge the speed or scale of innovation. So, what's the takeaway? AI is no longer a nice-to-have, it's a must-have. Even Apple, a company built on doing everything themselves, is willing to adapt and collaborate. Investors, consumers, and competitors should all pay attention. This is not the end of Apple's AI story, but it's a turning point, one that will define the next chapter of the tech industry. If you found this breakdown insightful, make sure to like, comment your thoughts, and subscribe for more deep dives into the financial strategies shaping the world. Don't forget to watch our other videos on tech giants, AI trends, and market-moving strategies, because understanding these shifts today can make you smarter, savvier, and ready for tomorrow. The AI revolution is here. And Apple? They're finally joining the race, on their own terms, but with a little help from their rivals.